What's up everybody? Welcome to the Stocks channel. Today we see the market continuing to pull back and prices getting very close to some very critical support. First up, let's take a look at a daily chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So today we did fill the gap, and that was the 100% guarantee that I gave you, that I told you with great degree of confidence, only 100%, that we would come down here and we would fill this gap around 520. And we did do that now on the NASDAQ 100, the S&P 500, and the Dow Jones. So at least at the very minimum, we have at least hit the price target that we expected. But now the question is, now that we are pulling back, are we done with the pullback, or are we really just getting started, and are we going to go much lower? So in order to answer that question, we need to understand that we did open a gap again today, and that gap is still open by 2 cents. Even though we did bounce today, we did not fully close the gap to the upside. And if you look at price action, all we did was go from an overextended condition outside the daily Bollinger Band back down to the rising 5 EMA within a bull trend. So there's nothing about the chart that screams bearish. We have very low volume, and that could remain the case all week long. There are a lot of people on vacation, and I myself will be one of those people. So this may be one of the only video updates that you get this week. I will still be in the Discord server, and I will still be giving plenty of updates there, but I'm not going to be promising that I'm going to have the time to do YouTube video updates. So with that being said, it could be a very light week, and we don't really want to be expecting huge volume days when a lot of traders are not currently trading. But we do know we're at least within this range of the previous all-time high, or call it all the way up there at the price target at 525, and this breakout level down here at 517, which means even if we do continue this pullback and we come all the way down to this breakout of support, we could easily bounce and go back higher to the price target at 525, or at least fill that gap right around 521. So this is going to be a pretty tight range, and I still do think this is a stock picker's market because you're not getting huge moves in the indices. And if you're day trading or you're looking for more volatility, there's a lot better stocks that you could be trading right now. And that's exactly what we will continue to do in the Discord server, getting those larger 1 to 2% moves instead of these small 0.25% moves. So for the rest of the week, I think you really just need to watch this support at 517. And as we come down into support, because we are in a bull trend, we could see the buyers stepping back in. That could continue to push us higher towards the price target at 525. Now, if we start to bounce immediately, then we're going to bounce off of this zone right around 519, go fill the gap at 521. And if we continue higher after the gap fills, then we'll just go straight to the price target at 525. And then we could test the breakout at 517 later. So this will be a range and this will be a zone. You could short in if you're at resistance or go long if you're at support. I think bears and bulls alike are going to do just fine. And I do think there could be some great risk reward ratios for some of the short trades coming up, which means it could be a good time to start looking at being a bear. And that simply means you're looking for more opportunities to sell and not as many opportunities to buy. Obviously, that depends on what you're trading. So you really need to understand what you should be shorting and what you should be going long, because I do think it's a stock picker's market, which means lots of stocks are going up. You do not want to be shorting those. You want to be shorting the stocks that are weak and in bear trends. So watch this range. And if we get a breakout, that could lead to a larger move, but I would not be expecting that large move this week. On the NASDAQ 100 triple Qs, we were down 0.36%. And we did get the 100% guarantee that we would come down here and fill this gap at 444. And we did fill the gap intraday to the upside, which was right there, right around 445. And as you can tell, looking at this price action, we did see price closing above all the positively sloping moving averages. And we did hold this support right around 442. So the price is still above all the moving averages. We still have a bull trend. And that means from this support, we could push all the way back again higher towards 449 and then 453. It is very simple to understand how we could bounce off of support, go reach a new higher price target, and then start to get a deeper pullback later in the month, or more than likely sometime next month. But we can cross that bridge when the time comes, because we're going to see it happening in the price action. So I do think if you want to be a bear, you could look at opportunities to get into low risk short trades, because it's not very high risk to short up here, and it could be high reward if we do come back down and get a deeper pullback to fill the gaps below. So I'm not saying we're going up or down. We need to let price decide that. I'm saying that the risk and reward favors being a bear, and I do think that's why we're going to see more people selling. and we're not necessarily going to be getting some high volume buying as people are looking for huge moves higher. That doesn't mean it can't happen. It's simply just playing the odds and the probabilities is what I always tell you about. And the odds and the probabilities that we go on some face ripping bull rally are not nearly as likely as they were in the past. And I think a lot of the buyers are getting exhausted and they could be due for a lot of profit taking. And that alone is enough selling pressure to push us down for a deeper pullback. So on the triple Qs, watch that resistance at 449 and that support at 442. And if we break 442, your next critical support is 437. On the Dow Jones, we were down 0.4% today. And again, we got the 100% guarantee that we would fill this gap at 395. And we did open another gap, which is very likely going to fill to the upside, which is now at 394.49. So just like SPY in the triple Qs, it looks like we could bounce in the short term as we approach support. And the support in the Dow is up here between 391 and 392. And if we bounce from that support, look for the gap fill below 395. And then if we continue higher, we still have the price target at 400 and the previous high right around 398. So again, these indices are likely going to be range bound between these support and resistance levels this week. So play the range, which means if we're near support, you want to be going long. And if we're near resistance, you want to be selling and going short. That's how you play a range. You're not looking for a major breakout here. You're just simply playing the support and resistance and playing the ping pong bounces. On the Russell 2000 IWM ETF, we were up 0.23% today. Price action still above all the moving averages. We did get a nasty rejection when we had that attempt to break 207, so that's not looking very bullish. So I think the easiest way to play IWM is either stay long above 203 or wait for the breakout of 207. And on the breakout of 207, that should tell us we're getting ready to move higher towards 214. So you're either playing the bullish momentum on the breakout or you're simply just staying long while we have a low risk trade above 203. And then if we start breaking down below 203, we're likely coming back down towards the bottom of this range at 199. On the ARKK ETF, we were up 1.7% today and we're sitting right below this gap fill, just below 51. And we also have resistance at 51. So the bulls need to push through this resistance zone and then we could get a higher low that could start sending us higher towards 54. I would consider critical support between 47 and 48. So as long as we're above that critical support, you can stay long, or you can get risk off if we can't hold above the 50 EMA at 49. So there's support about every dollar away in the ARKK ETF, and we're getting bearish if we get rejected and break support. On the VIX, we were up 1.15% today, and we're just trading within this range. And I told you last time we had an update that the VIX down here was going to lead to people taking hedges. Plus, we had the 100% guarantee that we would likely fill the gap. But now that that guarantee is over with, we could see the VIX cooling down yet again, back down towards the bottom of this range. Or if we continue the pullback, expect to see the VIX spiking up here above 15 as we get a deeper pullback towards more critical support. So the VIX isn't going to tell us anything major right now. We know we're in a bull trend that's pulling back, and it's whether or not we get a spike in fear. And if we do get a spike in fear, that could lead to high volume panic selling. And the way we're going to know that from the VIX would be a spike above 15 and a very sharp push higher towards 18 and 20. On Bitcoin, we're currently up 5.3%, and we are continuing the bounce off of that support at the retest of the support trend line at 61,000. We had the higher low at 63,000, and we broke the high at 67,000, and we're now heading back higher towards a brand new all-time high, and that is the price target just below 75,000. Now, on the way there, you do want to get more and more risk off unless you really believe we're just going to blast right through 75,000. But what I think is more likely is that we go up to 75,000, and then we start to get a deeper pullback or a correction, and that could take us all the way down to 52,000. So the way I view Bitcoin, I don't think there's a ton of risk reward for the bulls because yes, even though we are likely going higher, it is not likely a lot higher, so do be aware of that, or just simply stay long while we're above the breakout at 67,000. And if we can't hold that breakout, then you know to get risk off and we could be coming back down. So yes, this is a bullish setup, but it does look like an exhausted bull cycle that's about to go through a correction once we hit the price target. On Nvidia stock, we were up 0.76% today, and Nvidia was pushing up towards that price target right there, right around 971, and we did get a lot of profit taking as we were approaching that price target. So while this isn't the most bullish looking daily candle, we still have a bull trend and we're still above the breakout at 927. So it's up to you how you want to play this. We could come back down to the breakout and still run higher towards the price target. I still have a high degree of confidence we are going to see Nvidia at least 994 to 1032. And yes, it could go higher than that. Those are simply the price targets. But in the short term, if we do pull back, you'll want to make sure we can hold that breakout at 927. If we can't hold 927, then we could come back down to the rising 20 daily moving average, which is currently right around 880. On Tesla stock, we were up 1.05% today, and we are continuing the bounce off of the support at 167, and we're right back to the resistance at 173, so we really didn't learn anything today other than the fact that we're still within this range. Now, we do have a gap down here at 165, and there's a good chance that gap does fill, but there's nothing that says it has to. So just be aware that gap is there, and if that makes you uncomfortable, then you will want to have plenty of cash in the event we go lower and fill that gap. Or if you're bearish, you're simply shorting while we're trading below this resistance at 183 or the previous high at 175. So with the downtrend, it is going to be possible to be bearish on Tesla, but if we get a higher low bounce and we break this high at 175, and especially that resistance at 183, that could be a spark of a trend reversal of a higher low into a higher high that could start pushing us higher towards the 200s. So there is going to be a lot of volatility here in this stock. It is going to continue within this range, and then it's going to get a volatile breakout, and the breakout is going to tell us which direction based on the price action breaking the high or the price action breaking down below the low. If we break the low, I do think we could come all the way down towards about 158. On Apple stock, we were down 0.83% today, and so far it is largely doing what I drew here, which is that we could come back down towards 167 before sparking a bull rally that would likely take us into the 180s. So remember, this is still a bullish setup because if you're looking at risk and reward, there is a lot more upside likely coming once we hit the downside, and there's no guarantee we have to go to 167, and there's no guarantee that support holds at 167, but this is a trade I feel very good about, and I think if we see Apple coming down into the 160s, I am going to be a buyer of that dip. Even though it is a falling knife, I think it's very easy to manage risk there, and because it's very easy to manage risk, that is a trade that I like. And as it's coming down, I will be buying, and I will be setting up my risk and reward, and my reward will be a long-term swing trade that I do think could carry us out through the majority of April and May. So focus on these downside supports and specifically think about the fact that they could be opportunities to load up for a long-term swing trade. And then I think you will see it is very favorable risk and reward. So let's watch that support at 169 and 167. And the critical resistance we need to break is getting all the way back above all these moving averages, which is going to require a break back above about 174. So jumping back over to the S&P 500, this is likely going to be a very boring range bound index that is going to take us through a low volume bounce from support and resistance all week long. And then once we get into the month of April, I do think we're going to see very high volume trading break out of this range and likely get a very volatile market. So I do think a volatile market is right around the corner. While it may not be this week, it does look like it is going to be here very soon. So start preparing now, raise cash, start shoring up your positions, and make sure you're flexible so that you don't have a bias of whether or not we need to go higher or lower. Anything is possible in a bull trend because all bull trends eventually have pullbacks and corrections. And of course, we never want to put a limit on how high a bull trend can go. We've already seen all of the bears making that mistake. So calling a top is not what we're trying to do. It's simply just shoring up our positions, raising cash, and getting ready for some volatility. So remember what I said earlier, I don't know how many video updates there's going to be this week, but you can always join the Stocks Channel Discord server and I'll still be doing plenty of updates in there. You'll get access to all of my intraday updates and technical analysis and all of my trade ideas. And you can find out how to join the Stocks Channel Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.